Dear delegates, it gives me a great pleasure to welcome you all to the third edition of the world's largest fintech fest, Global Fintech Fest 2022, organized by National Payments Corporation of India, Payments Council of India, and Fintech Convergence Council. This edition of Fest is supported by Department of Economic Affairs, RBI, and IFSCA. My name is Amla Agarwal and I'm your host for this session. The topic of our discussion is business model innovation in lending, opportunities and challenges of BNPL, which is also, of course, a part of the panel discussion. We're glad to have an esteemed team of our great speakers who are going to share their knowledge with us. So today we have virtually joining Mr. Jatin Bhasin, Chief Product Officer, axio, Miss Vaanathi Mohanakrishnan, Business Head, MENA, M2P Solutions, Mr. Vijay Rajagopal, Head of Sales and Business Development, Amazon Pay. In order to moderate this session, we would like to introduce you to Mr. Mukesh Bubna, founder, Monexo Fintech Private Limited. So, ladies and gentlemen, please join me in welcoming our speakers and moderator of this session. So, Mr. Mukesh Bubna will take over from here.
Thank you very much. Welcome, Jatin, Vaanathi, and Mr. Vijay. It's amazing that this panel has uh, Amazon, which is in a way bringing all merchants together. Vaanathi representing M2P Solutions, which is a banking as a service, and Jatin, the brand Axio, which is bringing these consumers. So we have three different ways of looking at this buy now, pay later industry. If I may ask you guys to introduce yourself with your experience and the company you represent in few lines. If I can start with Vaanathi.
Hi, good afternoon. My name is Vaanathi. Uh, Great to be a part of this panel. Thank you for having me. It's quite a fair. I represent M2P Solutions. We are a banking and finance infrastructure player. I handle the MENA business for M2P. We've been actively expanding into these markets as we kind of deepen our franchise across India. We're live in over 8 markets in MENA today. I've been a banker all through. I've worked with brands like Citibank, ICICI. I've been in this quite a dinosaur of the region. I've been here for more than 17 years. Worked with NBFCs. I've worked with cross-border players. Also taken a jab at doing something by myself. So that's a very quick brief intro about myself and the company. Thank you, Mukesh.
Thank you. Jatin, over to you.
Hello, everyone. Hi, I'm Jatin. I head product at Axio, formerly known as Capital Float. Recently, we went through our rebranding about a couple of months back. We are a consumer lending startup. We are an NBFC ourselves. We work with large players such as Amazon. We power Amazon Pay Later, Make My Trip, Trip Money, or Make My Trip. And then in other verticals such as Unacademy on the edtech space and so on. We also partner with players like Razorpay, where we go after the long tail to support buy now, pay later. We also do personal loans. And we have India's largest personal finance management app, now called Axio, earlier known as Walnut, which is Google's editor choice for expense tracker. So essentially, like entirely in the consumer lending, consumer PFN space. We have been there for almost 7 years now. And 7 years back, the building blocks of fintechs itself did not exist. And now there is so much, right? And folks like M2P and all that are supporting. We work very closely with Amazon. So it's great to be here on this panel. Yeah.
Vijay, over to you.
Sure, thanks, Mukesh. Hi, my name is Vijay. I head sales and business development for Amazon Pay. Prior to this, spent more than 17 years in the fintech space. In my past, I've been head of strategy and operations at PayPal. Was one of the founding leaders at Zeta and spent some time at Zoll. Was also head of fintech strategy at Quest Corp and so on. At Amazon Pay, I lead all our businesses across our offline acceptance, which means across all products, all channels, and across all geographies. This is a combination of products like, as Amazon Pay, we issue four products: UPI, our wallet, proprietary wallet, cards, and pay later. Right, and we have several million customers across each of these. And like Jatin said, for pay later, we do work closely with Axio. And yeah, thanks for having me over and looking forward to the session.
Thank you. Uh, I'm Mukesh Bubna. I'm also ex-City banker, worked across various geographies in Asia Pacific, specific mainly India, Asia, looking at Singapore as a regional, and the last stint was in Hong Kong. I came back and started peer-to-peer lending marketplace, which is starting to grow in India as a new asset class for consumers. At the same time, RBI allows us to do maximum 10 lakh of loans. So we're also mostly focused on consumer space. But today is about buy now, pay later. And as we all know, this industry has grown rapidly across like a wildfire, starting from UK, US, Australia, and now in India. And I was reading some stats here, and the projection is that it will be 3,680 billion US dollar. I don't want to, I am falling off the chair when I read this number, and it's already supposed to be 132 billion global industry. So, Jatin, how do you guys see this industry in India, and sort of what keeps you guys awake at night for making sure this BNPL works out as the biggest industry?
Yeah. So for me, Mukesh, I think in general, fintech, they say, right, that there is never a dull moment. And especially in lending, now that BNPL is here, I feel if you see globally, players like Klarna, Afterpay, Affirm, and what you mentioned last year itself was like a combined $100 billion worth transactions are done, and this year around 130, and the projections you just said, like crazy numbers, right, are there. Essentially because finally that there is a product where there is a true product market fit. We don't have to seek that. Affordability lending has been there for ages, but traditionally, if you see, the experience was not what the end consumer was looking out for, right? The new millennial Gen Z are used to a certain experience, and why not banking or lending can be done in a certain way. What I just said in my intro, that the building blocks of fintech earlier did not exist, and now that they exist, all the BNPL players globally have leveraged on that and stitched the flow bespoke for solutions for checkout financing, for large ticket loans, for short term loans, has been stitched in a way that I feel consumers globally are loving it. So we are super pumped and excited that we have been into this space for quite some time, and now we are seeing the fruits of hyper growth and how the entire book is playing for us.
Thank you, Jatin. That's from the consumer point of view. Vijay, do you want to say how does this really help the merchants at your end?
Yeah,
Buy now, pay later. What
yeah,
does it cost them? Because I understand the consumers don't have to pay anything for this, right? Consumers pay 0% interest in most of the
yeah,
transactions.
yeah,
So, what's their motivation for taking this
yeah.
product to the market?
Yeah, yeah. No, I think it's important to look at this product in totality, Mukesh, and as in payments, as in different segments of financial services, this is a two-sided network, right? Like as equally important as customers are, it is important, from a merchant acceptance standpoint and from a merchant ubiquity standpoint, and it becomes like a virtuous cycle, right? Like so, more customers find more merchants where they can use this, and that in turn drives more new customers to adopt BNPL and so on, right? Even before I get into the merchants, I think one thing which we need to keep in mind is that the product is a combination of a credit and a convenience, right? I think it's important to remember that, right? Like so, And it is at the moment, when the purchase is happening, that this is becoming useful. And if you take a step back, right, like, so BNPL was always there, right? I think if you think about it, pioneers like Bajaj Finserv, like, started BNPL in some form, right? When they had the huge low or no cost EMIs, across the country, right, on the offline side. We've been used to debit card EMI payments, that have been there. That's also a form of BNPL, right? So BNPL is a larger term in that sense, right? Like, and now, when you go to a merchant, when you have POS base credit, when you have instant credit on an online platform, all those are also BNPL. So there are different cuts to what BNPL actually is, right? And my point is that I think for the merchants, it's very clear. One, it should drive more new customers to his platform. That's when it makes sense for them. The whole promise of ubiquity for the customers is only realized by having more merchant acceptance, right? Like, so, and Afterpay is a beautiful example of that success, right? They made sure that every single fashion, apparel, home decor merchant online was on Afterpay. They just made sure, right? They just said that I'm going to go after the millennial customer. That millennial customer, shops on XYZ sites. I'm going to be there in all of them, right? And I'm going to be there so that, the whole transacting becomes a habit, right? Only when it becomes a habit, then the customer sticks, for which that my merchant acceptance is very important. That's what we are also trying to do. I think, with Axio, the way we have started the journey is that it is right now a relatively close slash semi-closed ecosystem, where we have our pre-approved Amazon customers use pay later on while shopping on Amazon. We are opening up to other merchants where they can use pay later beyond Amazon. And while opening up, we are looking at both the online and the offline merchant set, right? Like, so, you can, for example, you can use it on Swiggy. If you go to a store and you kind of want to scan and use your pay later, we are enabling that. Right? So that's been the journey that we are on, Mukesh.
Thank you. I have a. I'll come to Vaanathi in a second on the tech stack which you guys are building to enable
Yeah.
BNPL. But this is a question for Jatin and Vijay. We've been talking, and I've been a very early in the banking in 90s. Nobody wanted to give credit cards, or the merchants were very unhappy to give a merchant discount rate, right? Of I remember that time on a Diners Club, there's a charge of 2.5%, right? And I would always have a pushback from my team saying it's too high, we cannot do it. And even in Master or Visa, where you have to split the revenue with four players, uh, it was 1.5%, and that was too high. Now, how does this? You talked about ubiquitousness, you talked about more people coming on. So, how does this economics work out for the merchants on this BNPL side?
So let me take that first. One problem which essentially BNPL has solved is, and our thesis at Axio is, that an end consumer makes a purchase decision first and then think of a payment option. So for example, they need a refrigerator to buy. They may have to buy a mobile phone because the screen broke. They are looking for an educational course available, or some healthcare, surgery needs to be done at any point in time, or going to one of the Amazon smart stores and thinking of buying. So the purchase decision come first. And once they look at so think of this scenario where you walk into a Nike store and you look at a Vomero shoe for 7,000, and you really like this Pegasus kept next to it for 10,000, and the shopkeeper tells you, "Hey, sir, this is available on 3-month no cost EMI. Why don't you pick that?" And then you feel that, yeah, so I can pay in 1/3 of the installment, which is easy for me to buy, and maybe I will be able to use this product better because I really aspire to buy that product. Essentially, for that merchant, the average order value or the sales increases, for which they would be able to consider the margins which they have to essentially pay to the lending company. Also, we feel we have a strong belief that unlike the Western countries, merchants in India are slightly different. The MDRs which are available outside globally is not something which is available in India. But if you look at an ROA tree or a unit economics of it, the transaction costs are much cheaper in India because of thanks to UPI and all the repayment instruments, unlike what is there in the US or Europe or Australia also for that matter. So the BNPL product, which is to be built in India, has to have the flexibility to have no cost on high gross margin products and maybe paid for the end consumer and not the merchant paying like the higher MDR and covering the entire cost, or maybe a mixed sort of thing depending on category to category. Now, for example, in travel, if you see a holiday package has a lot of gross margin, so you would see most of the holiday packages, because the ticket AOV is so high, it is all typically available on no cost EMI, but a flight ticket may not be, right? So because the margins are so we have to see category to category and stitch a very like an extreme bespoke thing for the end merchant depending on the use case. For quick commerce, it has to be like a 30-day product, and then it can be completely submitted. For larger tenures, 12 months and so on, it can be a like a price which is borne partially by the consumer and partially by the merchant.
I completely echo Jatin's point, right? I think it definitely has to be category by category. In fact, on the online side, we have kind of done a matrix level of segmentation, right? Category wise and then even size wise, right? In terms of the kind of merchants we deal with. Similarly, on the offline side, and for each, the way the MDR plays out and the proposition is different, and you need to kind of tailor it to that category. Merchants at the end of the day, want new customers. They want customers coming in and doing repeat business, and they want customers who are coming in doing repeat business to have higher AOV. If you can drive all these three, I think the propositions to the merchants, become very clear, and they are willing to pay, right? And I think that's really sums up, why merchants will pay for this.
It sounds so simple. Buy now, pay later, right? The amount of granularity which you guys are bringing out, thank you very much. I'm quite sure our audience is really enjoying. Vaanathi, over to you. Tell us what it really takes on the system side to be able to make the transaction. Like if taking the example of Jatin, I'm standing at a Nike store, I'm trying to get a shoe for 10,000 rupee. I will not come back again, right? I remember doing loan transactions. I had to go twice or thrice to the bank earlier. I'm not going to do 3 times visit to get a Nike shoe. I want it now. I have a party to go tonight and I want to be showing off my shoes. So what will it take to get that done through your platform?
I think buy now, pay later, generally, if we look at it, right, I think it's solved for two things largely, right? At a very fundamental level, you're solving for access and experience, right? So it's largely solving for the power of now, and which is where Vijay is probably coming and saying they're okay to pay, and Jatin's probably saying that's what I'm looking at addressing, which is the audience that could have been served better by a bank had bankers looked at understanding consumer behavior far better than the way we used to look at them earlier. At M2P, I think we have a great seating in terms of how we're able to look at all the players, or we serve the value chain in the ecosystem, right? So if you look at direct like BNPL players themselves, we might be looking at servicing them through layering payment products to be able to access and in network merchants, out of network merchants. You look at banks, I think they're perennially going through this journey of should we get into it, should we not get into it. But if you look at banks, we're able to offer them an end-to-end stack where right from origination of some of these customers or transactions all the way up to completing that, collecting that, and everything in between, the complete product lifecycle management, right? Banks who are not so big in the retail space, who are big in the corporate space, want to establish that footprint, want to do it quickly, grow inorganically. We have a complete end-to-end system in place for them. Bankers still tend to look at the fundamental aspects of credit risk and all of those aspects, or the unit economics. Fundamentally large, they look at that a lot closer than they would probably look at how Jatin would probably look at how can I solve that customer's experience right now, or look at how can I solve for Vijay's need, which is increasing that AOV, right? That's what we've fundamentally seen, and hence we see this back and forth in banks when whether we jump into it, get our feet wet, or take a hybrid sort of an approach. There's another very interesting piece of work that we do across the region, which is we work with large retailers. I would like to bring the regional flavor here, right? So when we look at, I think MENA as a region is fundamentally very different in that sense, both from the West, which is very well developed in terms of e-commerce, and the Far East also. Till 16, 17, we were still talking about, there's a huge mall culture here, right? So we were still talking about e-commerce being a new kid on the block, growing. We're seeing that kind of action. Very small percentage of consumerism happening through e-commerce channels. And I think the defining moment came during the pandemic, right? When you had strict lockdowns imposed, borders were shut, and a lot of retailers in that sense, I think for them who had not got onto this journey of being available online, for them it actually meant shutting down business. I think BNPL prior to this in this region was solving a very different challenge for merchants, which is cash on delivery, right? And MENA being a very less included region, for them, credit access was while they might have access to a bank account, or they might have access to instruments to kind of transact, credit was never available for them. So BNPL was fundamentally solving the cash on delivery problem. Come pandemic, everything moved online. So I think BNPL has now more become like a way of life for consumers here. People have understood that, it's not just solved for that access, but like you were saying, Mukesh, it's solved for credit. And I think it's also established itself very firmly in proving that it can be a great inclusion device itself. As a concept, it can bring in a greater substantial credit access to the wider region in a less included market.
No, quite insightful. Thank you, Vaanathi, for bringing what's happening in the MENA side. Uh, Now we have a question. We are seeing buy now, pay later, and we are seeing save now, pay later. Uh, if you can bring that flavor, what's going on? Why buy now, pay later, which is, I think, growing like a wildfire, and again a new play which is having save now, pay later. Just let's educate what you guys see. How do you see that save now, pay later? Is it trying to say consumers are getting too much in debt, so let's protect them to save now, pay later? Bring that some kind of a balance here. Open question, guys.
Yeah, sure, Mukesh. I think fundamentally I'll just start with one point and then have Jatin, Vaanathi chime in there. So, the categories are very different, right? So, buy now, pay later. You're talking of purchases which you need pretty much right now, right away, impulse, right? Save now is when you have time, right? When you have time, when you're building for a goal, and when you have the ability to kind of spread your payments over a period of time to get to a certain goal. So, I think the choice is very different, but both are important. That's really my short take on that.
Yeah, I feel a couple of my friends are working on Save Now Pay Later, and I try to get insights at how are they placing the product. So I feel that, as Vijay mentioned, that the product is mostly for discretionary products such as mobile phones, and which you can extend it for the next year. You are just aspiring to buy an iPhone, like right now 14 is launched, but you're thinking maybe buy next year and save it up for an year, is a great engagement tool. I feel if you are already into some sort of a banking, neo banking sort of a play, if you have your savings wealth sort of a product, that you save it up for that. And buy now, pay later, or any kind of a consumer lending product, essentially is right now, right? Like as I've been giving example, that if you need to go for a surgery, you can't say that, let me save it up for it, right? If you have to go for and take an educational course, you can't say I'll just save it up for that, right? And if you're just refrigerator breaks, and then you have to buy a new one, you essentially need uh, credit for that. So I
So
think
smaller
the two
ticket
products.
is smaller ticket, buy now, pay later. Larger ticket can be postponed, save now, pay later.
So I would not say it is on just on the amount, because buy now pay later now is extended from like really small quick commerce transaction to like really large, as Vijay mentioned, that even Bajaj in some form or shape is a buy now pay later. Buy now pay later in at least Axio feel is a quite a fancy term for consumer lending, because we feel that essentially the experience or the payment kind of an experience is going to become table stakes. Then depending on onboarding, what kind of a level of ticket size we will be able to offer to a particular customer. So somebody may get like a lakh of rupee of credit, somebody may get like $10,000. So it's going to be over a wide range of ticket size.
Vanati, how do you guys see it? Is your platform working for both BNPL and Save Now, Pay Later, or it's mostly focused on BNPL right now?
No, I think as a platform, we are pretty much, I think I'd like to say it the way that Madhu says it, right? So he says we're the arms dealer, and we're capable, I mean, we kind of service everybody who wants to kind of go out there and render the service. But I think as a concept, save now, pay later, I think is great testimony to what BNPL has done for the fintech industry. The fact that, you know, people are actually going out there, and this is also another parallel I'd like to kind of draw here is look at consumer behavior, right? Which is where we're talking about BNPL being like a way of life now for customers, that you're able to service them, and you build that trust that, you know, you're able to create that moment, or in the moment you're able to service them when they want to do it today, they're coming back to you later to kind of save up for that goal. Very interesting. I think gold, in gold, we always had this earlier. India's largely been a savings-driven society in that sense. So where you would go to these gold merchants, and before Dhanteras, you would have your, you know, deposits maturing, right? Where you'd keep saving up from Dhanteras to Dhanteras, and Dhanteras, the guy would come back and say, "This is your 13th installment, and here's it for you." So I'm paying that for you. I think it also goes out there to we're revisiting some of those behaviors and providing them for the new generation, right? In today's generation, if they're able to come back and tell you that, you know, I'm willing to travel that long journey with you. One of the examples that Jatin was saying, if I can say today that I'm going to wait for my next iPhone, right, and I can start saving for it today, whatever be my affordability today, but if I can kind of plan for that along with you over the journey, I think it also goes a long way in speaking about the trust that the customers have and the behavior that's been built with the customer in that journey.
Just one point there, right? Building from what Vaanathi said, I think it's interesting. In fact, if you think about it, the same category, mobile phones, can work for both BNPL and SNPL. Like, let's say the phone is on sale just for a couple of weeks, right? You don't want to wait then. You know, you want to kind of take that sale and you want to take that BNPL option and buy it. But if it is something that, you know, you want to plan for it and you feel that, okay, come my birthday next year, I want to buy it, you know, so you kind of save for it. So the same category lends itself to both depending on the consumer use case.
Awesome, awesome. Uh, as we are talking a lot about consumer, can you guys give me some insight of, is this Gen Z and millennial? Like, I'm not Gen Z or millennial. I've been having a receding hairline here, uh, and I have a credit card. So for me, my natural instinct is to just pull out my credit card and swipe it or put it on Amazon and buy things. What kind of customers are you seeing here, and where is this explosion taking it? In tier one towns or tier two towns or tier four towns? Where is this all happening?
So we are seeing a great pattern. One, this data is like in every fintech session seminar, you keep hearing that India is extremely underpenetrated. Still, there are 30 million people who have 70 million credit cards in the country of a population of 1.2 billion, 1.3 billion, right? So for us, 60% of our base is non-carded, right? A large portion of that is bureaucratic, which is a surprising fact for many, right? So there are people who are taking gold loans and, you know, personal loans and so on, but don't have an access to credit card yet, which is a great thing. Also, credit card users use BNPL from a convenience standpoint. So when it is deeply integrated into to platforms like, for example, our Amazon Pay Later, where our APIs are used, like the dashboard is there, our success rate is at like 99.99% because everything is being pre-fetched. That is your limit available and not available, just one click, right? So a lot of credit card users are not using primarily from a credit function standpoint, but they are using it from convenience. However, there's a huge population in India who don't have a credit card, who primarily use it for a credit need, right? So both kind of cohorts exist, and we are going after the non-carded, which we feel is a true opportunity for BNPL.
Yeah. And just to dissect that, right, I think Jatin made a very valid point. And just to put some numbers to it, the top 30, 40 million have cards. If you look at the next 100 odd million who digitally transact today, but they don't have cards, right, but they are digitally transacting. They're possibly, you know, your millennials or the freshers, you know, coming to work, newly joined work, right? But they transact on UPI. They're not eligible for cards yet. What we call as N2C customers, like new to card. So how do you get them in this journey? And pay later becomes a very easy and convenient way to get them into this journey. So it's literally about the, like, so it's, while you and I, you know, would use this because it's convenient, but for a lot of that 100 million, this is a path to actually getting into the journey of getting their credit scores and, you know, going from a zero file to a thin file to a thick file, right? This actually enables the journey.
And I feel that platforms like Amazon have so much of data to nudge this well, and they have been, and that's why the product is already India's largest buy now pay later product, because because what has been working for both Amazon and us is low and grow, right? So we go after these customers and give them like 2,000 rupee line of credit so that they can buy stuff like recharges, bill payments, and so on, and maybe small headphones. And then once they pay back, we increase the limit aggressively. And then once we see a lot of repayment track record, they are able to nudge, hey, by the way, this Diwali sale is going on, and you can, the Great Indian Festival is going on. You can buy this 30,000 rupee phone on EMI. So we can nudge and able to control the risk also.
Awesome. Uh, Moving from the business model to consumer now to the most slightly more controversial changes which happened in the Indian landscape. We recently had RBI, albeit a little reactive and little delayed, coming out with two changes. One is on PPI, stopping all the companies fintech who had taken the prepaid instrument to the next level of converting them to a credit card, halting that growth completely by saying prepaid card has to be just a prepaid instrument. Adding to that, they stopped even loading loans onto that, uh, and now the digital lending guidelines which has come out, and where they have come out with, you have to disclose the APR you're paying, what fees you are charging, what late fees you will charge. So a lot of consumer protection work, and as well as the lot of fintechs who were not regulated entity, and they were not following all the guidelines, if I may use the word of KYC, etc. How has that impacted or not impacted, and how you feel? First, let's break this thing into two, three parts. How you feel, and then we'll come back to the next one, and like we'll take all the three views. Jatin, you're on mute.
Hey, Jatin, you're on mute.
Yeah.
Sorry. So I said, let me go first on this, right? So, great point. I think, and I think if one takeaway for all the entrepreneurs or folks venturing into fintech, right? One learning I would give is that let's not take shortcuts. Let's not try to take like call the shortcuts as some sort of an innovation. Let's read the regulation by letter and in spirit, more importantly than the letter. For us at Axio, I would say the last 2 3 years, honestly, were like I'm saying before 2 3 years were very frustrating, right? Especially for all the folks at product and like new young guys joining the team, and then they're pointing, hey, you know what, Jatin, somebody else is like doing this without a KYC. Somebody else has been not even reporting to bureau. Merchants coming to us and asking that, hey, your process has like 2 steps for onboarding. Why is it so? Why are the other players able to do it, and so on? And we used to have long conversations with like our compliance and up till like our founders. I think at for us at Axio, our ethos is clear that we want to make credit good, and for that, consumer protection comes at the very center of it, right? So we were super happy. I can't tell you, this is probably my happiest moment in my 7 years when the digital lending guidelines came, because we are like, finally, this is out. We always knew that RBI has been working on, because there has been multiple working committee groups, but we were just like, it was just not, it was taking some time. And there were like a lot of saying that RBI is against innovation, all that, and which we totally like would like to refute. And we say that we believe that RBI wants folks to innovate, but keeping consumer data protection, consumer like every single thing, because still financial literacy in India is like really poor. Now, for us, it has been really helpful because all these years we have been doing KYC, we have been reporting folks on bureau with Amazon and everyone. We called BNPL a loan, like on our terms and conditions, like you have to sign the loan agreement, period, right? So I understand we may try to hide away, but what is the point? It's not that loan or debt is a bad thing, right? You're trying to improve your lives, but we should not like play shortcuts. What has been our learning, and finally, after like 2 3 years, it finally paid off. So we are in a super excited place, and I think most of the other people on the panel would also resonate the same.
No, absolutely, Jatin. I think the what has really happened is that, and I'll just put it into two parts, right? One is with respect to the guidelines in terms of non-banks not being able, should not be able to load on their wallets or cards. Like you can't essentially offer a credit line on prepaid instrument. That is the first part. Second part is on the digital lending side, right? Like so, I think what is important here, and at least we feel is that the RBI has always been a measured proponent of innovation while keeping the consumer interest in mind. And it is not just with this space. So if you just retrace last several years, if you look at the kind of guidelines that they first came up with on MFIs, right? Then the guidelines which came up on NBFCs, which continue to keep coming up, they've always tried to reduce systemic risk, right? They've always tried to reduce systemic risk, right? So if you let, and essentially what was happening was there were a lot of entities trying to, in some sense, take a shortcut, right? In terms of saying that, okay, I mean, like for the, like, and I'm kind of, I have a quick way to tie up with a bank or an NBFC. I'll offer this and, hey, I mean, like, KYC fine, like, like, so who, like, who's checking kind of a thing, right? So I think what was also happening with that is that the consumers, right? So think about it, right? As a fresh college grad, and it's important to visualize these things, to kind of understand what the consumer psyche is. A fresh college grad, like, so he now finds that, okay, like earlier, he could say afford only, a 3K or a 4K purchase, but there is now a card being given to him which says that, okay, hey, go and swipe for 10K. Right? Anyway, you can pay it in 3 months, irrespective of whether his bureau score is good. For all you know, he's probably a zero file customer, irrespective of whether he has any income coming to him, nothing, and no KYC check or very frivolous KYC checks. Right? So what happens is that for that consumer, now there is an enticement in terms of higher ticket size, right? So there is a thin balance between providing convenience and then nudging people beyond what they can afford, right? Like, so I think, and if you take, now I took one example, now you multiply that with tens of thousands of such people. No, that's a risk, right? That's a credit risk. And I strongly feel that, and I think the measure that was taken to kind of curb risk at the root, right? And to kind of say that, okay, no, this path to give credit will no longer be valid. In my mind, actually, is a huge beneficiary thing, for the consumers of the country, right? I think that's the first thing. Second, on the lending guidelines itself, I think the RBI is very clear that and I think if let's look at the philosophy, right? The philosophy is that if the lending partner is underwriting, right, and also taking the compliance and the KYC overheads, let the rewards, like in terms of whatever ROI that is being realized or APRs that are being charged, let the onus be on the lender, right? Not on the intermediary fintech, who's probably acquiring the customers, but like but is riding on the regulatory overhead which the bank actually or the lender actually carries, right? So the principle is very simple. If you're taking the risk, you get the reward. If you're not taking the risk, you don't get the reward, right? Like, so which means that so you can't say that I will I will get the customer, I like I will be easy on KYC, but through an FLDG I'll take a portion of the reward, right? Like, so so I think that was the other piece which kind of came in saying that, okay, like the onus squarely and clearly falls on the lender to collect, to report, to transact, and all of that. Yeah.
Thank you. I'll come to Vaanathi. I was trying to do a test on, without naming the brand, about 4 months, 5 months back in the first quarter on this, because starting my team member started coming and telling me exactly something. So I was sitting with my team member. He was trying to take one of these products online, and he didn't have his Aadhaar card. So my devil's mind came up and said, "Let me just give my Aadhaar card." And voila, he got a credit limit immediately, and we forgot about it. And 2 days later, he got a credit card too. So I was just wondering, uh, and that's where my question going to Vaanathi is: how does your platform make sure these things don't happen, or that's a configurable by each partner of yours? How does that work? Like, because that's a huge risk, right? Somebody, Mr. A, is trying to say, I have taken the loan, but KYC is on me. I do not know whose name will get reported in the bureau. I have no clue what's going to happen on that transaction, which happened with one brand, which I did. I really don't know what's happened there.
I don't think it's so much on the platform front again over here, Mukesh. I'll tell you why I think that way. Because I think it's to go back to what Jatin said. You need to recognize that this is a lending product, that you have to be running responsibly. There's no shying away, and there is nothing wrong about borrowing, right? And there is no need to. And so, in that sense, just kind of circling back, he also said you need to understand guidelines and also accept them in spirit, right? And not look about ways of circumventing them. So these kind of impersonations happen even if it's not, by the way, a credit product. So I kind of not respond specifically to that, but I think both consumers and brands and everybody who's in this ecosystem has a responsibility towards the consumer. And any lending product becomes predatory in the absence of we not fulfilling that responsibility, and there a regulator has to step in. So while Jatin's smiling year to year, saying digital lending has come in, and I'm really happy we were expecting this. Maybe if we had been a little more responsible in the overall, and there are actors who would not probably be as responsible, so who would have faced challenge. But in and the whole ecosystem, or even in what we're seeing in MENA, right? At least you're talking about in India reporting to bureaus. Here we don't even report to bureaus, right? So because there are no regulations around it, we are hearing talks of regulations, but there are only some responsible players, and they are still outliers today, but they do it out of that responsibility that they carry. That if I'm going to do a product today, if that's going to help in inclusion in the longer run, I should be reporting to a bureau, right? So even that, in some sense, in our region has not even started off so far, right? But I think it all comes down fundamentally just comes to the fact that we should be responsible in lending. If we need somebody to police us, but should we need somebody to police us is the fundamental reason for rolling out products like these, is to enable inclusion, is to enable access, and to bring in the fundamental experience of fulfilling a customer's need to buy or to borrow in the moment. But of course, he should be able to afford it. If you're not providing for that and you're not doing it, then I think there's a little bit of a lapse in responsibility more than anything else, which I think the guidelines will more than fulfill for.
So self-regulation is better than third-party regulating, or if you don't regulate yourself, somebody will regulate at some point of time, right? We'll see Jatin doing a bhangra at the end of the show.
Yeah,
Please
he's
take,
ready to do it now.
yeah. So we'll keep him waiting for doing the bhangra a little later. Any global regulatory views? How do you guys like? I'm sure Amazon has its market in everywhere. You guys are participating in buy now, pay later in a lot of markets. What are the best practices you think we can still bring to India? And I'm quite sure, Jatin, you guys talk to other players globally nowadays. Or if anybody has few recommendations still to the regulators or to the players, what would that be?
Okay, I'll go first. I think honestly, I think on this particular product, we as from the Indian payment side have kind of taken the lead, at least as far as Amazon is concerned. I feel globally there is a lot to learn from successes, right? Like so, whether you take Affirm, Afterpay, Klarna, whomsoever, I think the point of the matter is that how do you increasingly provide customized credit to based on the customer profiling, right? And I think you can get a lot better at that, through data and insights and analytics. We are just starting. Like if you ask me, we are just literally at the tip of the iceberg, right? Like the kind of intelligence that's there to bring to customers the offering and to take a step above, right? Like customized offerings from merchants tailored to that customer using pay later as as a starting point. I think the opportunity is huge.
Jatin, anything from your side on the regulatory front?
Jatin, you're on
So we
mute.
can't hear
Sorry, I
you.
was saying we have already seeing in Australia and UK the regulators are going after the great like the very easy journey that reporting to bureau, KYC and so on, which we have already been doing in India. So I think it's similar pattern. But one thing I truly appreciate what has happened globally. Look at Klarna, Afterpay, how they have made their product ubiquitous. It's offline, it's card, it's at checkout, it's at POS, it's at offline POS, it's at the payment gateways. So they did a great job in tech. I think now they are extending and incorporating all the elements of that. For us, we say that identity, which is essentially the KYC, reporting to bureau, like so that folks are aware that what kind of credit, reading their bureau before doing a full thorough underwriting, making sure that how the repayment would essentially be made, and most importantly, letting the customer know that this is credit. Like at our ethos, we start with calling credit and not hiding under like, instead of calling it a loan agreement, we say it's an agreement. We try to stay away from that. We say that let's be as transparent possible. And you can clearly see even in India, the KFS, which is key fact sheet showing the APR, everything in like clear, bold, crisp to the consumer is what we truly believe.
Uh, you brought up the point of Klarna, and everybody celebrates unicorns nowadays. And even in GFF, we were talking about how many Indian unicorns we had seen. But we've seen a massive drop in Klarna's valuation in the last 7, 8 months, and we've not seen them become profitable. How do you guys see this as a challenge for this industry?
So I feel two things added to that. So if you see Klarna share price drop was, which happened globally with all tech companies also, not just with like fintech. So a significant part of that was like every single company was hammered because of overvaluation over the period of time. Folks realizing business model. I think, I think a part of it was correction happening, and part of it is going to become fine. Also, I feel we also believe that lending is a slightly slow business. You have to low and grow. You have to learn first, take a few months, MOBs we call a month on book, and then measure it and then expand. I guess some of the players globally went just like on a really fast pace where they were not able to control the credit losses essentially. So while I feel that the unit economics and everything is strong, it's positive. If the credit losses are being controlled, I think they're going to be back in shape because the essentially product market fit is there on both sides. Merchants need it, consumer need it. So they are truly solving a right problem. They have the right tech in place. I think over a period of time, these companies are going to come back. Like the stock price is going to be back.
Vijay?
I think echoing Jatin's thought, right? I think the startup peaks and troughs are like, I mean, it's not just this category is feeling that. I think that's happened across multiple spaces, and I think the key to recognize is that these corrections are important. Like, whenever things get overheated, there will be some corrections which happen. I think it's important to take those learnings and build from there. Is where I would really leave it.
Bharati, anything from your side?
I think one thing that I'd like to kind of put out there is I think while all of what Vijay and Jatin said, right, it's been like it's been an industry phenomenon. All tech stocks have taken a beating. One thing is I think with the thin margins that the business has in its own model, right, that it exists today, with the kind of ticket sizes and the customer segment that BNPL serves today, there has to be an innovative way of managing the loss rates, right? We are going to see anything to that extent. You'll have to give it some MOB because you'll have to see how this behavior pans out over a period of time. And I think people also have to be patient that it's a new business, right? We'll have to see how this grows on. Customers, Klarna has done a fantastic job in building adjacencies, bringing that kind of width in the kind of offerings that they do today. So we can't take away all of that they have done, which will all kind of come back as a feeder. All the data comes back to kind of feed into what they can do with that customer. To look at those loss rates and to react to it like that, I think it's a little too early. We should give this business some more time, is my view.
I had a great time talking to you. I learned a lot. The fact that uh, staying the course and doing the right thing pays on the long term. From merchant point of view, it's a average order value goes up. Uh, whether it's India or MENA, we are seeing this adoption happening. Uh, right? Everybody is welcoming digital lending. Surely in this panel, we have had more people saying yes than nays. I'm quite sure there's a side who are saying nays. And I'm happy we can open up this forum for some questions before we close.
Before we go ahead, firstly, I would like to thank speakers for such an insightful session. We, of course, spoke about different things like buy now, pay later, save now, pay later, e commerce, consumer behavior, self regulation, and many other points, of course. And also, I would like to thank Mr. Mukesh for moderating this session so well.
Well, thank you very much. I'm still looking for Jatin doing a bhangra.
Okay, so I have got like two questions. I've just sent it on the chat box. Do you want to read it? Do you want me to read it for you, or can you just see it?
We can see it, right? So I think the question
Yes.
is, does it affect small merchants negatively? I'll take that. From our experience, we have not seen that happen, nor do we anticipate that to be seen. Another, it's important to remember that the small merchant has a choice, and will, even if you take both online and offline merchants, the merchant has a choice to enable it or not, right? Like, so it is not that something is being kind of forced. There is no real forcing here. So the merchant has a choice to take it, and only if he is convinced of the benefits, he needs to take it. So and we spoke about the benefits in terms of driving customer convenience, and more importantly, driving customer traffic, right? Like, so it really depends on whether the merchant wants that or not, and so on. So
Great. So here I'm posting the next question.
What are the risk management systems for business owners in BNPL? Jatin, Vaanathi.
So from a risk management perspective, I think it comes down to for the lending entities, essentially, it comes down to one, fraud mitigation, right? So which has to be closely looked upon, and then second is underwriting. So basically, it comes down to intent versus ability, the two main things of credit underwriting, and continuously look at data. Also, if you see BNPL, I think two tenets of BNPL are low and grow and repeat transactions. So as the repeat base keeps increasing, risk tends to keep going down. So one should like not let the consumers go, keep them engaged is one definitely part of it. And lending itself is always a barbell strategy, right? So you need a certain set of good customer like credit, I would say, or from a credit perspective, like Bureau Tech, you know a lot about them, and then you should always experiment and keep experimentation at center. Just don't take experiments go wild, right? So I think these are the.
Okay.
Well,
I'd like to
Sir, would you
add
like
to
to
that
close?
question that
Sorry.
we brought in on systems and risk. I think it goes all the way. It starts from who's the customer, to be able to establish the identity itself of the customer, and then go on to how you underwrite, and also your systems need to be capable of being able to run different kinds of risk rules all the time. We do it as bankers, where we run different tests, right, across segments, across customer segments. I think to that extent, your technology needs to be agile to be able to adapt to those kind of tests that you can run. It is only then that you're going to be able to render better solutions to customers. So I think risk management and allowing data play, and how you kind of federate all of this when you render those solutions, becomes very, very important, which is also where there is a lot of relevance to the infrastructure play itself.
Mukesh, sir, would you like to conclude the session?
yes. Now, thank you very much, Vaanathi, Jatin, Vijay, for coming on this forum. I wish you all the best, all three of you. Uh, and I hope next year when we are speaking again or we are there, we are hearing about Axio and M2P being part of the unicorn list. Amazon is already right up there. I remember hearing way back in early 90s, the survey in US where Gen Zs were asked where will they open up the bank account. It was Amazon, Google, Apple stores. So I think you are becoming a giant in every forum, and wishing both of you great success and global ventures there. Thank you.
thanks, Mukesh. Thanks for moderating this so well. It was really a pleasure. The way you kind of orchestrated this session was really nice.
Thank you.
Thanks to Jatin, Vaanathi. I think very, very good exchange of thoughts, and I learned quite a bit, through the conversation. Thanks so much.
Thank you, guys.
Thank you, Mukesh, for I think you have great insights across fintech, from lending to P2P to payment. So I think it's great, always great chatting with you. And I am, of course, big fan of Amazon and M2P for innovating the way in like fintech and not just fintech, other places also. Thank you, folks.
Thank
Thank
you,
you.
everybody. It's
Thanks,
been
everyone.
fantastic.
Yeah.
Thank you.
So with that, we would bring this session to the end, and it was lunchtime, of course, but we had great number of participants. Thanks to this enlightening discussion, fantastic session. Once again, we would like to thank our esteemed speaker and moderator, and the audience for being a part of this session. It was an honor to have you here for Global Fintech Fest 2022.
Thank you,
Thank you.
guys.
Thank you.
We would like to thank our partners, Team Partner WhatsApp, co-powered by Amazon Pay, Spend Management Partner Encash, in association with Perfios, Payments Partner Cash Free Payments, CEO's Dinner Partner HSBC, Co-Agenda Partner Lyra, Paypoint, Session Partner Fedzai, Bureau.id, Rico, Gold Partner Jokata, Pay10, Innovity, Beams VC. So see you all in the next session. Thank you for being a part of this one.